Okay, quick Thursday morning radar update. Markets pull back 4%, around 4% from all-time highs in the history of the world. Let's go and have a look. So let's just buzz through these markets. It's going to be a lot of told you so out there today. So my advice to anyone who listens to these things is put your blinkers on and also put your headphones on today and just block it out. So just normal action. As we know, markets do trade up and down. They don't only go up. So we're day 3 into day 2 into a pullback on the transports. Let's just jump to the DAX. The DAX is pulling in normal action. Is there blood on the streets? We've got some distribution in the US. What's notable? So a couple of distribution days there. S&P still 3 distribution days on the trot in the S&P there, and a couple in the Nasdaq as well. So we'll see where they want to take to. Nearly said tomorrow then. Today, Nasdaq, Russell, obviously been the weakest. The ones to watch for the bull case are the strongest markets and how they react around sort of mean trend area. In my world at the moment, I'm in the 250 and the small caps area. So, normal action. Pretty good actually in the UK. It doesn't look anything like the US for the stocks, but famous last words and all that. So normal action. Let's go and have a look what is moving today. I think the first thing to look at is just horrible day to bring out good news, but we got the 10%, more than 10% earnings reaction. Another result for the GTRS. Traded towards an earnings breakout. It looks like it's accelerating again now. We'll see what happens once the results start to update, the forecasts start to update. But keep it simple. I did a video on this one, so I won't go through it. Just long, wrong. Obviously, everyone knows how I sort of position size and put my stop in play, and pulled all the way back in, and then went all the way back up. Guess what? I think the thing, what's always worth just repeating is when the market's doing fantastic, people tend to get a little bit giddy with their risk allocation. When the market's, in the early stages, they tend not to believe the market. I take my brain out and just allocate risk on the best ideas as they line up, according to my own index trend model, what tells me how bullish the market is. The market is 100% bullish primary trend until it isn't. If it rolls over, it takes a long time to do that. So on the primary trend, it's always the same. I think it's Peter Brandt who always says, on your winners, you've never got enough shares, or when when they're doing well, you've never got enough shares. But when they're pulling back, you've always got too many shares. And it's a game of matching your own psychology to your sort of position sizing, so you can trade the plan. And the key is so you can trade the plan, because if you just start chasing extended moves and adding things what are extended, when some news hits the tape in small caps, 10% moves are the norm. Gap risk on both, both sides, gaps up of more than 20% plus. It happens quite often. Gaps down do as well. If you trade small caps, you have to account for more volatility, and that's what I'm all about. So if you fly too close to the sun, you probably end up mismanaging things. Now, mismanagement and overruling things can look fantastic at the point in time where the market does, actually crash like it already has done. That's a once in a decade or more sort of event we had in the past there. You can look like it can look like it's a great methodology, but it's basically, you're saving pennies at the cost of pounds in normal market environment. So a little bit of off-piste already. So it is a miserable day. I've got 2 down over 5%. I've got another 4 down over 3%. So, it's a miserable day in my portfolio. All-time highs on Monday. Miserable pullback on Wednesday. But that is what we do. You've just got to suck it up and keep trading that right-hand edge. Let's have a look in the volume leaders again and see what's in there. It's 1040. We should have traded, let me work it out, 29, 31% to be an average volume. 31%, this won't take long. And into the small caps. Let's see what's moving in these. Weeks up 31%, not much at all. There you go, that's the worst day we've seen in a long time. ALU, obviously this one's smashed it out of the park in the GTRS. It's got fantastic forward numbers. I've actually forgot to load the oh no, it's there. I thought I forgot to load it. ALU, we know all about this one already. What I will just repeat is, yes, sometimes an area like this will reward you, but this is the area we looked at. And it's 160%, 150% out of the base. So over and over again, even with the best stocks, I won't chase. I'll just wait for them to trade like stocks trade, and if they don't pull back, so be it. Had the chance to buy it here, didn't buy it. You can only you can't invest more than you have to invest. is the basically basically the message there. But yeah, just goes to show, hit the GTRS on huge sort of re-rating sort of numbers, and then all of a sudden you can see it ticks virtually every box we like them to see them tick. So moving on. Just looking at that Titan there, that's a return to growth. No forward numbers on any of these. Metals and mining still. But buoyant. All you're going to read about is inflation, and you know, I'll put me. I'd take a bet that we go the opposite way myself. Might not be today, might not be tomorrow, might not be next week, but I will. That placing's out of the way on this one as well. I've got virtually nothing on this one, but we had a look at it the other day. It traded a swing point, but it talked about placing. If you read through the report, so it's an interesting area, that one. I don't know anything about it, so not much to see. We're bouncing at the moment. US markets, it would be better if they opened down, to be honest, and then ground, you know, they had a gap to climb. I'm not sure they're going to do that. It would be better if they did. Quicker they get it out of the way, the better. But yeah, we will revisit and see. What a miserable market on my birthday. Another thing I will just say about my own methodology is, I remember when I started this game, on a bad day, there's a tendency to sign into my account and look look for things I can do to rectify the markets going down. We've had the sort of talk so many times over the last month. Huge profits, huge run, fantastic market. All markets will have pullbacks. You just got to be happy with how you're going to manage it. You don't want to be mismanaging it or being forced to manage things different ways. You want to come at it and have it in place beforehand. And mine's in place. I don't come to a day like today and sign into my account. I only sign into my account when I have to update a stop loss or when I have to buy something. I usually sell things on stops. Sometimes I will rotate out something into another thing, but I don't let the market tell me to sign in to have a look at pound signs going up and down. It's probably the worst thing you can do. Especially, it's bad days make people do that, and that is why on bad days or bad market environments, that's why you can't deal in spread bet accounts, and you get bad fills, and I can't do this, I can't do that, and you see people on Twitter tagging their broker into a tweet and blaming them for things. At the end of the day, it's the problem is the people, not the software. You've got to have a plan, and my plan does not involve signing into my account to make new plans on bad market days. So I will leave it there. And the sun is out, and it's my birthday, and it's probably the worst market day of the last 10 months or so, probably. And it's on my birthday. Fantastic. Okay, cheers all.